Well, they say the only two certainties in life are death and taxes, but there is a third one, and that is that the government will keep changing the tax system. This year is no exception, and when the new financial year starts on Sunday, so too will the biggest tax shake-up since the introduction of the GST more than a decade ago. Andrew Robertson reports.
Sunday the 1st of July is a huge day for the tax system, with two of the most controversial taxes in Australia's history finally coming to fruition. Of course, they're the carbon tax and the mineral resources rent tax, two taxes with big implications for the business community. The Australian Chamber of Commerce and Industry believes small business in particular will bear the brunt of the carbon tax.
Householders are being compensated, small business is not being compensated, and energy-intensive small businesses, on our analysis, potentially are going to see a reduction in their profitability of between 10 and 20%.
Not everyone shares that view, though. The Institute of Chartered Accountants believes it's too early to make definitive statements.
I think the smarter thing to do is to actually sit tight for a little while, wait to see the hard evidence come through about the precise impact that both the carbon price and the mining tax will have across the wider business community, which will ultimately, of course, flow through to households and consumers.
But for business, and particularly small business, the carbon tax and the mineral resources rent tax are only part of the story. From Sunday, businesses will be able to claim losses of up to $1 million against profits in previous years to get refunds of tax paid in those years.
This measure only applies to small businesses that are structured as companies. The vast majority of small businesses in this country, around about 2.5 million of them, are structured in vehicles other than companies.
Which means most small businesses will miss out on a measure the government says will support productivity and promote employment. But for those who do qualify, at least one tax expert says they have plenty of time to get their claims in order.
For some people, you may have not done enough of tax planning for the 30th of June 2012 year. Don't sweat about it, because you probably won't have to lodge your tax return until 15th of May next year. And if you're running at a loss, you've only got a 6-week period before you can claim back your losses from this financial year just gone.
All small businesses will be eligible for the accelerated depreciation deduction of up to $5,000 for motor vehicles and for the instant write-off of up to $6,500 for other assets.
If you're registered for GST, you can factor in the GST uplift. So it's really $7,150 is the price point that you can look to buying a new asset, claim the first $650 back in GST in your quarterly BAS, and then claim the last $6,500 in next year's tax return.
While the 1st of July will herald many changes to the tax system, it will also be notable for what's not there. The government using this year's budget to back away from its pledge to cut the company tax rate.
More than $2 billion in tax relief is not being delivered to the business community. It was the only concession that was going to help fund the higher costs of the carbon tax and the other new costs that are coming in from the 1st of July.
Two of those costs will affect high flyers in the business community. Those earning more than $300,000 a year will have their superannuation contributions tax doubled to 30%, and if they leave their job with a huge golden handshake, only the first $180,000 will be taxed concessionally.